When we look at the financial statements of Pakistani companies, we find them quite different from what we have learned in the textbooks written by foreign authors. For example, Pakistani companies use the title of Statement of Financial Position instead of balance sheet. Similarly, Statement of Profit or Loss is used instead of income statement. Apart from differences in the titles of financial statements, we also find differences in the items of these financial statements. For instance, in balance sheet, instead of owner's equity, the term share capital and reserves is used. Now, in order to understand why these differences exist, we must first understand the requirements that are followed by Pakistani companies while preparing their financial statements. Pakistani companies prepare their financial statements in accordance with the requirements of the accounting and reporting standards applicable in Pakistan and the requirements of the Companies Act 2017. As far as the accounting and reporting standards applicable in Pakistan are concerned, these are the same international financial reporting standards which are globally accepted and are set by an international accounting standard setting body known as International Accounting Standards Board. And the objective for setting these standards and adopting these standards by most of the countries globally is to converge, in fact, towards a uniform set of accounting standards which result in high quality, transparency, and comparability in accounting information across borders. Once these international financial reporting standards are set by IASB, for adoption in Pakistan, they are reviewed by Institute of Chartered Accountants of Pakistan. ICAP is in fact the body that regulates the profession of accountancy in Pakistan, and under it, a body named Accounting Standards Board reviews these international financial reporting standards. They in fact ensure whether these international financial reporting standards are in accordance with the economic and legal circumstances of Pakistan, and if they are so, the Council of ICAP, it recommends Securities and Exchange Commission of Pakistan for adoption of these standards. And SECP is in fact the regulatory authority that enforces these international financial reporting standards in Pakistan through its notification in the official gazette. So Pakistani companies, they have to follow international financial reporting standards as their accounting framework. But let me mention at this point that most of the countries globally, they have adopted these international financial reporting standards as their accounting framework. But in United States, still a different accounting framework is applicable, which is known as generally accepted accounting principles. And as most of the textbooks, they are written in context of United States, we find differences in the financial statements of Pakistani companies and in the material which is available in the textbook. Another major cause of differences in the financial statements of Pakistani companies when compared to the textbook material is the requirements of the Companies Act 2017. The companies in Pakistan, they have to prepare their books of accounts and financial statements in accordance with certain requirements which are laid down under this act. For example, the fourth schedule of Companies Act 2017, it specifies the disclosure requirements that must be followed by the listed companies in Pakistan while preparing their financial statements. So the requirements of Companies Act 2017 sometimes cause the difference in the appearance or items of financial statements of Pakistani companies.